be a weekly market recap. This week we end up on a negative 1 RR. It should have been a 5 RR week, but I did not see SMT with DXY on Friday and with GU as well. With SMT with GU, but I didn't see SMT on Friday, and that SMT happened during the session, which usually during this when I analyze the market, that is my locked in bias, but the drawn located changed instantly during the session. So now we have to be more flexible, and now the bias could change during the session. And that was the only trade we had throughout the whole week. We had a bear setup. I'm not going to talk about it. I am going to talk about the lesson here. This whole week I had only one trade. This whole week, Monday we were right, Tuesday we were right, Thursday we were, Wednesday we were right, Thursday we were right, Friday unfortunately I was like, okay, this fair value gap, daily fair value gap looks very clear to get tapped. We had S&P the the 50 high, but looking at the factor over here when the market was down here, I was like, man, there's a big ass gap on the on the weekly time frame. It needs to be filled in a fair price, as well as I did not see the S&P divergence until I lost the trade. Eventually, after I lost the trade, I saw the S&P divergence, and the reason why I didn't see the S&P divergence, the reason why I didn't see the S&P divergence is because the S&P divergence happened during the session, which that literally affected my bias, and that would have changed my bias from a bearish bias to bullish bias. So this is a new problem I encountered where my bias changed during the session during my trading time. So now, instead of trying to lock in a bias, right after I analyze the market, I have to constantly analyze DXY and GU for in the higher time frame, like daily, right? To see, okay, because daily time frame is shouldn't look at, and daily time frame affects my bias. So daily time frame affects my bias. I need to be, cautious and look at it and have awareness. So I didn't see that happen on. I didn't see that. I didn't monitor DXY and GU during the trading session, which that is what led us to taking a loss. Eventually, we did have a setup to the upside, which was a 5 RR, which was a rejection block long, and that ended up on a win. And eventually, you can see price reverse from there on forward. But this week is a very revolutionized week because I'm moving over to just trading rejection blocks, and there's a big lesson this week. Before I'm gonna talk about the rejection block later on. I'm not gonna talk about this video. There's gonna be a video on its own. But this week, the Friday trade, that's the only day we had a setup. This is the only day we're gonna talk about anyways. Other days we were correct, but if there's no setup, there's literally no reason for us to talk about it. On Friday, but keep in mind, on these days we did have setups. But they were very low quality. As you guys know, we don't take low quality setups. We want to take high quality setup, which can yield us a over large sample size, can yield us a excellence return. And as you guys know, our goal is to only take high quality setups, which is A+ only. Which is I don't even count it as a A+ setup. I just count it as a setup because all my setups have to be A+ setups. They cannot be anything below. Because my goal, as you guys know, real consistency in trading isn't about having 40% in a month. It's about having a consistent return, which is between 6 to 12% a month. Which is my goal is not even 6% a month. My goal is 5% a month. It's not even that much, right? But that is what real consistency is, right? If you try to aim for 30% a month, you're going to have emotional psychology problems. But there's going to be setups like this, right? This is the last Friday rule from the rejection block entry. If you have setups like this can definitely yield you way more than 30. But I'm way more happy. But I'm happy enough to have a 5% return over in a month, right? My goal is not even to have this much, right? We'll have setups like this will offer me a lot of RR, but my standard is always 5% because if I put it to 30%, and I may just take wrong trades, which will not yield to that 30%. So you make me formal, this, that. So my goal is to take only 5%, which generally my rejection block entries, if it's a fixed RR, will offer me a 5 RR. But if there's specific protocols, you may vary like 37 RR to 3 RR or 4 RR, right? The least being 3 RR. But the 3 RR trades are very on occasion. They don't occur often. So there's usually above that most of the time. But yeah, that's that. And this week, I'm not gonna talk about Friday, and let's get straight into it. On Friday, we were looking at first. My boss was wrong, so I'm not gonna talk the wrong bias, but overall, I didn't see the daily SMT with DXY, especially with the SMT with the Pacific SMT, which is ranges and the IRL to ERL. In this case, I didn't see the daily IRL, and there was a daily IRL SMT, which DXY tapped it, so GEU does not need to tap it, right? Although you're probably wondering, well, you always want to trade the cause, not the effect. Effect is the EU, the cause is the DXY or GU. But that is that is some false fantasy people do. It's only that to those who don't know how to trade it, right? But yeah, that's the only thing I could say to you guys. But overall, this is our setup. Let's go to higher time frame for this specific day. I had a bear setup, which gonna talk about the rule. I wrote the rule down and I'm gonna read it out loud to you guys. But on a Friday, we had a classic special profile to the upside, Tuesday low of the week. We as well had a Monday. We as well had a daily S&T IRL to ERL, daily S&T CFD to the upside, as well as we had a big wick on this candle on a weekly time frame. It needs to close in a fair price, and market needs to go back up higher to close in that fair price, as well as going down to the lower time frame, as well as we had a close above equals higher prices. Now, in the lower time for the market negative context, we had a super low, super high, stable low, stable high, premium discount, tap premium daily range high. We are in premium, so we're in discount. We're in discount of the daily range with daily range high. As well, in discounts, you want to buy up. As well, we have a neo credit profile 1 accumulation, 5 mid position non-expansion. As well as we have a bullish order flow. As well as we have a rejection below the low. We're looking for a break above the high. As well as we have a range. Our range is typically, in this case, our range would have been the daily low, but there's no specific range here. But everything else was here. So it still made it up a high amount of RR. Now going down to lower time frame, 15 time frame to execute this trade, we had a right over here. We're looking for the right time to purge and Nevada low, as well as we're looking for a resistance block entry. In this case, we had a Nevada low at the 1 a.m. low. We purged it out at the Pacific time between 6 a.m. and 10:30 a.m. And eventually, we're waiting for that to get purged. We're looking for the right model 1. Then we're looking for resistance block entry. We had the right model 1 right over here. Just this candle right over here, as well as we had the resistance block entry, stop loss right below this. How can we put our stop loss tighter in this case? Because the wick is so big and it's Thursday and Friday, as well as it goes against the higher time frame draw on liquidity, which is the weekly time frame. So we can have a tighter stop loss, because since this trade right over here won't last for a long time. If you have a setup like this setup right over here will last a long time. So you want to put your stop loss more than usual. So if it's at 4.7, put a 5 pip stop loss, right? Just to cover that specific spread, because some brokers will go down lower and do the spread will take you out sometimes, right? Because the volume is down there. So if you have a trade like this, which was taken on Monday through Wednesday, as well as you went to high time and draw liquidity, then if it does that, you want to just secure a little wider stop loss. As you guys know, if you're in the right side of the market, you usually want to have a wider stop loss, just because market will have less chance of less chance of hitting your stop loss as well. If he does go down, guess what? You're still kind of secured because you're not outside the market. Overall, the market will go to your direction, so you shouldn't really worry about that, right? So having a wider stop loss is very important. This was from Romeo. This is actually correct. I've had a setup, and this, by the way, this is some insights here. But these are my specific trades that I missed and journaled. These are the trade I actually specifically journaled. This is the Friday trade right over here. Right, these are specific trades that we actually took, right? Pacific trade is the Friday setup. These are all Pacific setups that we had in the market. You can see this setup failed. Why? Because it was a Friday trade, so it's inevitably gonna fail. So, but when well, this is a Friday trade as well, but the range is still respected, and we're going with the higher time frame. In this case, we were still going to higher time frame, but our goal is overall. It says it's Friday, go for risk take profit. Even on this case, but in this case, you can see, although we're going for risk take profit, although got meant the range was still respected. The range still got respected. The NFP candle day still got respected. And on this day, we had a resistance block entry, but on this day, we never had a resistance block entry. But market retraced back down to resistance block before going up higher, right? So that's why that's the difference. In this case, the resistance block got tapped, and we're not here to take profit. We're not looking for a trade. In this case, it didn't get tapped, so you got retraced to on a Pacific time, and yeah, so that's that, and that's the differentiates. You could this as I said before, this may look like some hindsight chart, but these are Pacific trades that I actually took. These are all the trades that I actually took. This is the CPI long that we had it at fucking broke even, which was a 51 RR trade. This may look some unrealistic, but I've shown you guys most of the examples. Right, these trades right over here. What was I trying to talk about? They may seem hindsights, but these are resistance block entries here, right? You can see resistance block entry down here. We go back over here, resistance block entry once again, resistance block entry once again for 5 RR, because we're going to get the higher different withdrawal liquidity. Resistance block entry again, resistance block. All of these are resistance block, which they offer a high yield return, right? Resistance block again, 4.4 RR. This was a 26 RR. This is our setup, which we had a 15 RR. But if we were to enter the resistance block, it would have yielded in a 26 RR trade. And on these setups, on resistance blocks, we did not break even at all, because what I see is that market will tend to come back down. So so my goal on this was to tell you guys why you need to have a wider stop loss, because what happens is market retraces back down to the rejection block sometimes, right? When it retraces down back to your entry, because your stop loss is going to be tight, so you want to have that little wider stop loss. So going back to show you guys even more example, which was this right over here, market will retrace your entry all the way back down before going back in your favor. So in this case, you don't want to get stopped out, right? So it's 2.5% stop loss. Market's highly going to stop you out. So you want to have a little wide stop loss. Either put it by the low near it, or if there's no low and the market's far away, just put increase the stop loss by 0.3 ticks to 5 ticks just to cover that spread. So in this case, if the market goes back all the way down here, you're covered, right? So the spread doesn't take you out, and the market overall goes back to your direction. You have a general. This is the trade that we missed, which was the Wednesday. This was the Tuesday trade that we had. There's another setup, resistance block entry again. This is the setup where we had our wrong bias on this day. You can see resistance block entry again, plummeted. In this case, we're increasing our stop loss just in case if the market tends to go back up all the way, to have that. This is considered to be insurance, right? Same thing over here. Shut up, boom. And on these days, you can see if you were to go to a objective take profit, you break somewhere over. If you break somewhere around here, market will chase all the way back down to your entry, stop you out, then go back to your direction. That's why I said break even is a scam, right? But when this is some hindsights, this ain't no hindsight. This is the trade that we specifically took on these specific days. So go down to lower time frame on the 5 minute on this specific day. I go back here. I don't want to go to bar replay, but let me change this real quick. How do I change this? All right, this is the setup we had, right? Our number one, resistance block entry, stop loss couple ticks below it. Yeah, so we're targeting the higher time frame, and this one, the resistance block entry. And Paul wondering, well, this has to be some crazy hindsights. If this theory is true, in the future, you should be wealthy. That's the goal, right? My goal is to have compound entries. That's why I'm changing over to only trading resistance block entries, right? Simply because of the compound interest. And I have a little, I've added 20K in a one account, so I'm gonna grow that account out to a couple 100,000. And compound interest is what actually creates real wealth. And that's, as you guys obviously know, Warren Buffett and multiple other billionaires, the reason they got rich was through compound interest. And they took, especially in Twitter, the people, some people I follow, they take 1 to 2 high probability setups a month, and they show up every single day. And one setup, when they occur, they make a lot. Their goal isn't to make 50% return a month. It's their goal to make 5-6% a month return monthly, and that's a lot. If you naturally compound that is a lot over a 12-month time, right? And that's a 5-6% only. You add up these, that's a lot, right? And these are very realistic. This is, what is this? This is a low time frame risk, high time frame reward. This is a Romeo. This is one of the Romeo's, what is it called? One of the Romeo's butterfly effect model. If you guys go check that out, it's one of those models. But we're getting off track here. But the goal is here is the Friday trade. We overall had a wrong bias. All right, and the lesson is, I can read it out for you guys right here, right now. Is, let me go get the rule because I wrote it down. As you guys know, obviously, if you don't write it down, then you will forget it, right? Let me go and get the lesson here. I must always monitor DXY and GU on that daily time frame every couple of minutes during my trading hours, which is between 6 a.m. to 11 a.m. for potential SMT divergence. SMT could occur on the daily time frame during the session I'm trading, and that could shift my bias since SMT divergence affects my directional bias. I consistently analyze both DXY and GU to identify any higher time frame SMT setups that could potentially shift my directional bias from being bearish to bullish, just like this. This SMT divergence occurred during my trading hour, so it could shift on instant. And the reason, if I go back all the way once again, the reason why this one went to a loss, right? If you go back over here, let me get the chart one more time. The reason this one right over here went to a loss, I can show you guys this beautiful trade. The reason this one right over here on this day, the reason I was wrong on this day, because my bias shifted through, or right on the session, right? My bias changed around 8 a.m. and I still had a long bias on this day specifically, right? My bias changed on this day to bearish, right, during the session. So that's why it's important. So you can see I have proof. And probably wondering, well, you're just doing a lot of, didn't you preach to not do backtesting? This is backtesting to specific things. This is it. I just don't go to the lower time frame and just backtest my strategy. I look at previous trades that I take, losses, wins, misses. This was a missed trade. I go back into it, look at it. Okay, I'm wondering. And then eventually, when I'm wondering, I'm looking for specific things, all right? I look for, okay, what does the entry get tapped on? So more often than not, I check all my entries. And when I check all my entries, and when I check the register, because I check specific things, I check register block entry versus my normal entry, number one, and threshold entries. I checked it, that the register block entry yielded way more than my model one entry. Model one entry, I had losses. I took losses where time ran out, right? Because I would have it set up at 11 a.m. I'll take the model one, I'll get lost. And time factor comes a lot of play on this setup. It's like, okay, the register block alone itself yielded even more profit than my model one entries. Because model one entries, I checked my recent history of my trades, ended up on a 46% for the past 6 months, right? 46%. And I checked, okay, I'm like, this seems, with the losses, by the way, I said, then I eventually went back, okay, I checked all my trades, and eventually, this is where I checked register block entries. Okay, register block entries, I would have ended up on a 245% return, with all of them being an A+ setup, which means I risk 5%. So if I'm having, like, let's say, this may seem hindsight, right? But this is a long-term goal. So if I take a trade with 1,000, right, which is the 5% risk for me, and I add 245x, that's what, 245,000. I'm not sure, 2.5 million or whatever, right? That's this trading. That's very realistic. Larry Williams did, 10,000 to $1 million, right? $1.1 million. It's very realistic. As because I like, as you guys know, how Romeo says, once you get the trading, you can make money out of thin air anytime you want, right? It's like basically a glitch in the matrix, like simple as that, right? Because it's controlled. So is that definitely happenable, right? So if I risk that much, I'm making a huge return. I mean, if I add up the losses, even the losses and the mistakes I made, because I end up with all the mistakes I made, I still end up on a 46% gain. But I could have ended up what, a 211% gain with a 34 losses. I could have ended up with a what if and I checked my registration block entries with a probability losses on my registration block entries, which were only 2 probability losses, which I could definitely see losses happening more often than not. And as this says, my early stages of trading, losses are gonna pile up a lot, which is naturally good thing for you, because if you lose the losses a lesson, you're gonna grow. You're going to improve and get more advanced on the ladder. So you can see here with the losses, with the losses I have right here, with the 34 losses, by the way, with the 34 losses I have, I set up on a 48% gain, 46% gain, I mean, somewhere around there. Even with that, I still ended up right. But if I were to right now just take trade my Model 1 entries with a Model 1 probability loss, would have been only 4 probability losses. Everything else would have been a win. 16 wins. And my goal isn't to take a trade every single week. My goal from now on forward, since I have a larger capital, live capital, my goal is to take 1 to 2 high probability setups a month. Because I checking back into it, like I check my trades. The 1 month I end up in a loss. I checked the month, I was like, okay, what happened in this month loss? Because I tried to make a lot of money, right? And another month that I checked, I didn't force any setups. I ended up on a huge gain, right? And I ended up on a gain which is consistent, which it can repeatedly happen over time. So so where I don't blow my account out when that happens, right? So yeah, that's the lesson. That's the overall trade. You can see this trade right over here. It took a while to take profit. This trade up right over here, if you go back in time, this was a what? This was a weekly CRT here. Weekly, and keep in mind, these are the specific trade I took. These are signals that I give you guys out to you guys as well, right? You can see these are the setups that I give out to you guys. Before this kind of closed, there was a model confirmation. See, when all day came back down, you had to take profit overall, right? So that's why that's why I said my goal is to take only 1 or 2 high probability setups and have a huge amount of patience. Because patient games, the patience isn't the problem. Like, that's easy work. The goal is for me to take 1 or 2 trades a month, right? If I take 1 or 2 trades, like at the moment right now, I'm still going to be looking to take those high probability setups. But my goal overall is to take 1 to 2 high probability setups, because keep in mind, it's compound, as I said before, compound interest, and my goal is very long term. And that 20,000 could turn to 1 million, 2 million, 3 million, and go even more. And guess what? I have the risk management, I have the edge over the market. I have the position sizing, I have the risk management. I'm going for a Pacific RR. The least RR I go for the 3 RR or 5 RR, right? Risk block entry, because sometimes I could have an objective entry, and sometimes the RR entry wouldn't deliver because the objective entry would get tapped in reverse, and the take profit of it will get tapped in reverse, right? So this is the weekly market recap, and there will be a video section on it. This whole thing is gonna be a section on that specific. This may seem like an insight, but there's gonna be a section on. There's gonna be a video on this specifically, talking about the only risk block entries only. And this is the weekly market recap. So the lesson of the week is I must consistently monitor both DXY and GU on the daily time frame every couple minutes during my trading hours between 6 a.m. to 11 a.m. for potential SMT. SMT could occur on a daily time frame during the session I'm trading, and that could shift my bias. Since SMT affects my directional bias, I consistently analyze both DXY and GU to identify any higher time frame SMT that could shift my directional bias. And I've showed you guys example here on this day where it happened during the session and it shifted my bias from bearish to bullish. And the other one right over here, where it shifted my bias from bullish to bearish, right? Because the directional bias changed throughout the session. And the lesson is I must not lock in entry, right? I have to trade the chart, not my locked in thing. I know I can't lock in a bias. I have to have awareness and be smart. And if the market changes, I change. I don't lock in a bias for that specific day. I change. I adapt. And this is a weekly market recap. Thank you for watching. Make sure you guys like, comment, subscribe, share, and join the discussion down below. This week would have been a 5-hour week because we only had one setup this week, which is the Friday trade. And unfortunately, since we still make mistakes, which is a pretty good thing, right? If you don't make mistakes, then you're never gonna make it, because you need to make a lot of mistakes in order for you to actually go to in a position where you're, where you barely make any mistakes at all probabilities, which that position takes a long time. You must feel at first bitter, then you have sweet later. You have sweet now, then you get bitter later. Right? If you just try to, mess up your rules, do this, do that, do that, right? You're going to overall bitter later. And that bitter later is gonna hurt and take even more time. And you're gonna be older, you're gonna age. But yeah, thanks for watching. Make sure you guys like, comment, share, join us down below, and I'll see you guys later. Peace out.